Welcome to Bitcoin Escape Plan. In today's video, I'm going to go over the key levels that we need to see form as support, and failing that, if we break those levels, talk about how low can we reasonably go right now in this part of the cycle. As always, I like to start off these charts with the 4-hour time frame, and later on in the video, I will go over my recent trades and basically just what I learned in this range over the course of the week. And of course, if you are new here, you can go check out bitcoinescapeplan.com. Every Monday, I release a newsletter going over the key levels that I think are most likely to appear on the chart. And if you are not familiar with my channel, you can check out this one, my 2025 analysis report, just so you can see my track record on calling these broader macro swings. BitcoinEscapePlan.com. All right, let's get into the video. 4-hour chart to begin, as always. So I'd like to start off first with checking our anchored VWAPs. This is the middle band. If you are familiar with this channel, we talked about it a while ago. Us breaking above that middle band is great, actually. Us being able to stay above it, super important. So as you can see, the price is trending down towards it now. It's currently sitting at about 65.8, just below that, which is slightly higher than when we interacted with it last time. Not by a ton, but still an important indication of a uptrend. And basically right now, the only thing that's standing between that is about 66.1K at the moment. And then we do have a previous daily close that the price is actually respecting fairly well at the moment. You can see a bunch of these 4-hour candles are closing directly above that level. I'm not sure exactly what day that was. Let's see. Looks like it was this guy. So last Saturday is the primary one that's forming on. But the price is respecting it fairly well at the moment. I mean, we are well above this bottom trend line here. But that's what we need to pay attention to most closely, is a reaction to 66.1. And then as I talked about on Threads over the last couple of days, 67 is super important just for us psychologically, being pretty close to that 69K mark. I'll go over that more later on in the video, like the two psychological levels that I think are most prominent and where the price is right now. This is the main failure recently that went on. I'm going to go over this section of the chart in more detail during the trading section, but when we failed that, that's what pushed us down here in the first place. And I'm starting to hear more people talk about, are we going to go below 60K right now? Which I have to admit was surprising to me, just based on the fact that we got to break out that high to begin with was surprising to me. But then this is the downtrend anchor VWAP. So again, this is the middle band of I refer to this as the elder VWAP. I have it drawn literally from fucking 2011. I never touch this tool. I just leave it. And then I did draw a downtrend anchor VWAP as well from the top of the price. You can see this is the upper band of the elder VWAP. This is the other one that I drew from the high of 126 in October. Super useful tool, very, very useful. So as you can see, we broke below this bottom band of the downtrend anchor VWAP a while ago. Like at the end of January, we were already flirting with it for a while, and then we lost it and then continued down. This is the first time that we've really retested it, because here when we retest it, these are the Bollinger Bands, and this is the SMA, and we're nowhere near it with the price. Nowhere near it. This green squiggly line is what we're looking at the moment. Nope, didn't mean to do that. What did I do? So this is our first break of that on Wednesday when we shot up through those levels. And again, if you're familiar with this channel, I talk about the same levels all the time. And what did I say? 73.8K was the super important level. We topped at 74. Like I've been talking about that for weeks now, because that is the psychological peak of March 2024, which again, I'll go over a little bit later. But this short term, when we gained strength on that trend, and then we lost it. Price is now going to be pulled again towards the middle band of the other one. So if you want to think of it this way, it's like I have one anchor VWAP, the elder VWAP, is set from the lowest point on the chart that exists, at least on this chart. This chart, I believe, starts in about 2010, 2011. So if you could find an older one, you let me know. But for the most part, this is one of the oldest Bitcoin charts that exists. That's where I have that one set from. So it's giving me the average volume weighted price since the candles began. And then again, this top recent one is from the all-time high. So from the all-time high, it's telling me like what does the price need to express in terms of all of the people here, all the people who bought way up there. What is the average and the volume and the weights of those positions? So when the price interacts with those, it's very important. Not quite the same as a simple moving average or the Fibonacci pivots as well, which Fibonacci pivots, you can literally just use the Fibonacci retracement tool. I'm just lazy and it's easier. Literally with 3 indicators, I'm able to accurately predict the price all the time. So I don't think you need to make it more complicated than it is. So in the short term, like I said, we wanted to see strength at 67K. We're kind of showing it. As you can see, we're kind of flirting with that at the moment. We've got about an hour until this 4-hour candle closes. So I would hesitate to call that bullish if we close it there. It's still going to put some pressure to the downside after that. But then again, like I said, this 66.1K pivot is going to be super important, because if we have strength there and we never touch this middle band of the anchored VWAP, that is good. That gives us permission then to trend back towards the top of that anchor VWAP, which I gotta be honest, we're nowhere near it. Like, we're so far away. That is this guy at 95.3K, which again, if you've been following for a while, that is lower than it was last time we looked at it. Last time we looked at it was like 96 basically, but still far out of range. So what this tells me is that we are likely going to, if we can show strength at this middle band of the elder VWAP, that will give us permission to retest this lower band of the downtrend anchor VWAP. And that's going to be pretty important on the chart. That's currently sitting at about 70.9. The Fibonacci pivot in that region is 70.75, and the price did react to that. That's another one on the 4-hour where it was like really fighting to stay above it. This is actually where I closed my other trade. Like I said, I'll go into that a little bit later on. And for anyone who had multiple contracts, it would have been really great to rise that full momentum. But in the short term, we're basically waiting for strength above 67 to give us permission to retest this SMA, which is at about 68.6. If we can show strength there, then we're going to have to see whether 68.9 forms as resistance or not. We did shoot right through that here, and even this candle here, we shot right through it. This guy, we shot to it and kind of struggled. So I don't think that there's a ton. As you can see, that's kind of where, I mean, I wouldn't say the volume drops off there, but it's slightly less than the true like anchor in terms of volume. Right there is a little bit lower. That's why we're sitting there, to be honest. This is the highest amount of volume because 1, we spent a bunch of time there, and 2, people are like really defending that price. So that's about it for the short term. Is we want to see a retest, favorable retest of the SMA at 68.6, 68.7. But at the moment, 68.9 is probably, it looks like it would form as resistance, not support. Again, unless it shoots right through that, which is possible, but it would entirely depend on how we react to this guy. So I'm going to be watching that very closely for tomorrow, and I will go over that more in the newsletter tomorrow, I think, because I'll have more information throughout the rest of the day. All right, let's go to the higher time frames before I get into the trade recap. Pretty much the same story on the monthly time frame and the weekly, quite frankly. We need to be above the 50% mark of this range between 76.2K and 64K, or we are like more likely to go back to the downside. You know, that is a downtrend. like no doubt about it, that is a downtrend. So at least this is a green candle, but that's still overwhelmingly bearish for the most part, even though we have significant volume in the green. Still not the type of candle we want to see necessarily. I'm not claiming to be a candle expert, I'm not, but still, that is overwhelmingly a bearish pattern still. So on the higher time frames, I can go over the psychological levels that I was saying as well. It's a little bit easier to see on these guys. So this is 2024. This is when the ETFs get launched, about December of 23 and January of 24. The price shoots up then in February and launches in March to about 73.5 1.8K, which is a first time in Bitcoin's history that it reached a significant new all-time high that early in the halving year, that being 2024. That is uncommon. Typically, it would be in Q3 or Q4. Overwhelmingly, it's been Q4. So that, I really think, has changed the dynamics of Bitcoin a little bit in terms of like how quickly how violently we will see an all-time high. I think this happening kind of like pulled away the likelihood of like a 130 or a 150 run this time, because we already got a significant all-time high, and then 100K is the important psychological level. The same way that this is an important psychological level just because that's where the price got rejected before. So it's important, you know, like we need to know if it's going to be relevant later, the same way that 69K is. You know, one, it's a meme, and two, that was an important psychological resistance from that point onward, is can the price get back above that or not? And when it did that very quickly, that's what gave it credence to run higher. And I would imagine at that time, 75K was probably the number that was on everyone's mind. So it would make sense it being rejected slightly below that. Obviously, still a great year, 2024. You know, you could have definitely reallocated a couple times and been very happy about those short-term returns, even though it's not what it was back here. You know, like that's a much more dramatic move to the upside. But overwhelmingly, I think we just need to pay attention to the reaction to the monthly and weekly SMA. For anyone who is newer to crypto or Bitcoin or investing in general, anytime the price is below the weekly or the monthly SMA, that's just good, historically speaking. For Bitcoin specifically, what you're going to want to have to acknowledge with the chart is if you buy at the tops of any cycle, you have to wait 5 years to be in profit forever. So this is 2017. So the top candle closes at about 13.8K, let's call it 14K. So that is 2017. And here in 2022, which is 5 years later, the price temporarily dips above the closing candle, but below the wick that time, which that was about 19.7K. Let's call it 20K, because it's easier. Everyone remembers 20K. Just like they remember 70K, not 69K, even though it's a meme. So what some people have said, and I don't think that they're correct because we've already seen that broken, is that we, by the same logic, will not break below the top of this candle, which is at 61.6. And I don't know if they weren't paying attention, but we already did that. We already went to 59.9 with the wick. Whereas again, the previous instance, we broke past the top of the wick for sure, but we closed still at the bottom in the bear market above the highest closing candle. Whereas I do not think that's going to be the case this time. I think we are going to close well below that highest closing candle. Even the first peak, it's about 58.6, 58.7. I think we're still going to break below that. I'm of the opinion we're going down to here, 34 to 39, I think. I don't know, but that's what I think. By the end of the year, that's what I would expect, or 40K if you want to be a little bit more generous. I do think that takes most of the year. I do think that there will be several attempts to go back to the weekly SMA. I don't think that we're going to see a reclaim of the monthly SMA. There's just no precedent for that. Anytime we've ever broken it, we've been below it for a while. Over here, we broke it, we're below it for a while. In the old days, we broke it, and we're below it for a while. Like, I have no reason to believe that magically that's no longer going to be the case. So until proven otherwise, that's what I'm going to assume is going to continue happening. So what we're looking for at the moment is easier to see on the weekly chart, and specifically in relation to these Fibonacci pivots. And again, I'll go over this briefly and then jump into the daily and then jump into the trades. So 96K was the level we had originally been looking at as a possible retest, but I think we already got that. I think it didn't register as a Fibonacci pivot back then, but this, functionally speaking, is the same as when it happened over here, where in January, we tested this Fibonacci pivot for the first time. That's literally half of the 96K one. This is 47.6. Let's call it 48. That's literally half. And then we had the retest. This is in late March. We had an attempt earlier in February, though, and then a failure, and then an attempt and ultimate failure in March. And in that instance, the weekly SMA is a lot closer to that pivot point when it does interact with the SMA finally. This pivot point actually forms as resistance at that point. And if we look at where we are now, we're actually way lower than that already. This would have been the pivot point that would have like given us a possibility of reclaiming this and pushing to 96. But over time, as I've been saying in other videos, I think that's less and less likely. And I think it's actually this 80K pivot, which is not reading as a current one, but I think that that's the more important one at the moment, even though the indicator is not telling me that. It's telling me 76.2, which is fine. I also think that that is critical, but right there is, I think, going to form as resistance between 80 and 84. Because this, in that earlier example in the chart in 2022, we already would have been here when the price interacted with the SMA. And then that's when 96 would have formed as resistance. But we're not there. Like, we're way down here already into basically the second week of March. So I think our best case scenario is we're going to form support at 76.2K. We're going to probably get past 80K on the way up, okay? Break through the weekly SMA. I would imagine top somewhere below here. This is 86.7K. This gap, 86.1 to 86.7. I would imagine we start to struggle around there. And then there's a lot of distance between that and 96K, which would actually form that as significant resistance. And that's assuming we can even get above. These are weekly closing candles that did not close above 93.6, 93.7, even though it did. This is the only one really that wicked significantly higher than that. These ones wicked a little bit above it, but you're talking about, a couple $100 in terms of the price, like not really anything too crazy. So I think that that is going to form as resistance between about 93.7 to 96K. I don't really believe we're going to get that high, to be honest. I think it would be more likely somewhere down here between 84 and 86.6, 86.7. That's when we'll have a reaction to the weekly SMA that I think ultimately will result in a failure. Obviously, anything can happen. This is not financial advice, but that's what it looks like to me based on the history. And I say this all the time, but Bitcoin is math, not just money. It is trending a lot of times in the same direction. So important to think about. Daily time frame, and then the trades, and then we'll move on with our days, everybody. So we did just break below the daily SMA. Super important. We finally were chopping at the end of February, whereas we've lost it, basically since the middle of January on. We've been well below it. So this is super important for the short-term trend, just for us to understand. Like, do we need to go significantly lower? Because it is downtrending. I mean, this is a much sharper decline. But what we would want to see here is some consolidation and potentially an uptick temporarily. But it doesn't really look like that at the moment. It looks like a continued downtrend, especially since we've broken below it. So that was Friday that we had a retest of it. And then ultimately it took into Saturday for us to break below. If we close today, Sunday, below that, it's not great. Probably will push the price down towards 65.8. Like I said, on a lower time frame, I believe that's 66.1, something like that, 66.1. So that would be the important short term to watch, is can we get right between that range there? You can see kind of the gap between those. Do we form support there and then get another retest? Because you got to remember, at this point in February, for us to chop that many days on the SMA after, again, just being well below it for a significant amount of time over the past couple months, that, again, is best case consolidation, or it really is a possibility that we see strength out of this trend. Now, I got to be honest with you, this does not look good. Like, this does not look like bullish continuation. That's why I keep advocating for, like I said, I would be surprised if we're able to get a push past 80 to 84K. Not impossible, but I would be very surprised personally. And this is kind of like a weak attempt at a higher channel. So why did I close my trade? I like, for anyone who has already been following this part of the videos that I've been sharing with lately, I'm starting with a very small amount of money in that account. I am going to move around a bunch more money this week because I feel like I have a good enough handle on it now where it makes sense to increase my position, but not necessarily my risk, but just having more margin available essentially. Because what I had to do was I ended up deciding to take this trade. I think it was a 23% profit, which is amazing off of a 2.3% move. I believe that's where I had to enter because I didn't have started with like $100 in the account, so very, very low, just so I could learn all the rules of how they function. And essentially between 1 p.m. and 3 p.m. Los Angeles time every day, so 4 p.m. and 6 p.m. New York time, it's the overnight session, and essentially you need to have the margin available to trade as if you were trading with 3.3x leverage instead of 10x leverage. So if you want to trade with $300 worth of contracts, you would need $1,000 worth of cash in order to sit for those 2 hours and remain in your position. I did not have that. So I had to close it here. And I closed it primarily, like I said, because of this reaction to the downside of the downtrend anchor VWAP. And that was a great trade. I'm not upset about 23%, on the second or third contract that I've traded of these. But this retest here, which by then I was already out of the position, this retest here and failure, and then break directly below, both this Fibonacci pivot and the SMA is a great hint that we're going to get significant downside. And that, I believe, would have ended up being about a 90% trade, a little bit more, actually. I think it's still going. Yeah, almost a 10% trade. That being a 100% trade at 10x leverage. So you would have doubled your money this week in the matter of literally Wednesday to now Sunday, which is crazy. There's the opportunities that these perpetual contracts offer for anyone who is able and comfortable with only looking at the Bitcoin chart and nothing else. And you can do this with a bunch of other assets, but I'm not going to. I'm going to use Bitcoin and nothing else. And I'm totally comfortable with just waiting a couple days. Like in the last video, I said we were paying attention to this guy. The Bollinger Band did expand, although you can see it now, it's curving. It's curving again now. So we're going to have another opportunity, probably around the same level, to have an interaction with the bottom band, which that would indicate a long entry right here. Same as this guy. Like this guy would have been the best entry. This is when I put cash in the account because I was like, God damn it, I'm not missing another clear entry like that. That one I believe also is almost a 10%. Jesus Christ, yeah. A 17% trade from top to bottom over the course of, again, 3 to 5 days. These opportunities are all over the place, and it's not really, but a 17% move over the course of a couple of days in Bitcoin is not insane. That's pretty normal. So I really have been enjoying using the 4-hour chart specifically, because if we just look at it briefly, if you were only taking trades based on breaks of the weekly SMA, for example, this guy here, say that you actually ripped the bottom of that, which it would have been hard. I think most people maybe would have caught it here. You had times where you were in profit. This is still an 8% trade, a 10% trade. That's amazing. But that would have been a stressful position to be in, and you would have been in loss probably for a significant time of that, as opposed to, again, those are on the 4-hour chart. I think the weekly is a little bit less reliable in terms of you would have, this technically would indicate a long, but you would have been wrong. You would have been wrong. You would have been right eventually, but most of these, I don't think it's quite as reliable. Even the daily, the same thing. This is again is why I'm so focused on the 4-hour. I just think it's more accurate. So the daily here, you would have had a short time to get a long before you had to be out. Short time to get a long before you had to be out. You would have been wrong if you had bought a long there. Would have been wrong. Would have been wrong. You would have such a short margin to actually get in and out of the trade versus, so that's the end of February. And let's take a look at that on the 4-hour. So kind of similar where, oh no, that's actually a little bit too far. These guys, it's these guys. So kind of similar where you would have had a very short period of time to be in profit on this one, and then you would have had to close it. Very short time to be in profit on this one, would have had to close it. This one, a little bit better. If you waited till the candle close, you could have caught this guy, which is about a 2%. And again, 2% with 10x leverage is 20% profit. That's amazing. But like that's why I'm focused primarily on these breaks of the Bollinger Bands, because it at least gives you a clear indication of, okay, well, there's going to be a short-term upside reversion, a mean reversion, I believe is what it's called. And those to me are way clearer signals than we spend most of our time in the middle of the bands. Other than, again, we've been dropping recently, so I think that kind of skews the data a little bit. Most of the time, though, we're inside of the bands or interacting with the SMA, as opposed to the interactions where we are touching the bands are much more infrequent and are pretty clear indications of short-term trend. More reliably, I think, than any other time frame. So that is what I personally am focused on continuing to study and share about. And also, that's what I go over in my membership as well. If you have questions about that, let me know. Leave any comments if you have questions as well about this analysis, or just I would love to talk to more people about trading these perpetual contracts, to be honest with you, because I find them fascinating. But that's what I would be thinking for a trade like this. Now, you've got to remember, I was trading with one contract. So with trading with one contract, I was pretty happy with 23% profits and wanted to close it instead of risking what happens if it goes back up here and I start losing these profits. But if you buy 10 contracts here, great opportunity to sell like 3 or 4, great opportunity to sell another 3-ish. And then for the last couple, you can kind of just wait. You're already a ton in profit. So you actually can afford to just kind of wait and leave the rest of the cash in there so you can go overnight. But how I'm basing the entries is based off of these breaks of the Bollinger Band. And then I'm timing my exits either off of like arbitrary 1 or 2% markers, because sometimes I do think that is appropriate depending on your position size. If you have $1,000 worth of contracts and the price moves 2%, that's $200. That's awesome. Like that's a day of work for a lot of people. So I think that there's a great argument for building scalps and then just leaving enough of your position available so that you can actually let your runners run as well. Because that's, again, a 90, almost a 100% trade, which is awesome. In just a couple days. Off of, again, not a crazy, like 9% on Bitcoin is not crazy. That's just a couple days at this point. The average candles, as I was looking on the daily, are somewhere between 2.5 and 5% is how much the candle will actually go over the course of the day. And there are only a couple days where it's more than 8 to 15. Like very few. It gets like less and less over time. We've had one, I think, like 14% candle recently, 14 or 16%. But most of the rest of them, they peak at around 8 or 9% over the course of the day. If you can ride even a third of that, 3%, again, 30% on your money, you're not going to be upset about that. You're going to be very happy about that. So that, I think, is the key, is just being over collateralized. Like if you have just a bunch of cash with perpetuals that you're not even using, like again, for that example, like if you were trading $300 worth of contracts, you'd need at least $1,000 worth of cash. I think that that is a comfortable way that you can really build a strong position. Just having enough contracts where you can time multiple take profits, because they will occur. Like this is the other trade that I had taken where I did just close all of it there, and I was correct to close all of it there. But even then in that instance, where we saw it go a little bit lower, maybe you close a couple more contracts when you see it fail. Me personally, I probably would have closed all of it when I saw it fail there. And I don't have a rule set yet for taking the reversion trade. Like for example, like this is a short, this is a long, this is a short, this is a long, this is a long, this is a long. Those are very clear and obvious, and there's no question in my mind that that would be the case when I see that happen on the chart, even without seeing this other part of the chart. I don't need to see that. I know from seeing this, I will get over here, as opposed to like these guys, like I don't know that that's close enough to regard that as a proper failure. I mean, all of these technically still would have been, no, fuck you, hotkeys. All of these technically would have been appropriate trades still. I mean, 1.5% is like, it's not crazy. But if you're just looking for scalp trades, again, getting a 15% profit is really good. You know, like there's nothing wrong with taking that trade every time that the chart presents it to you. I just think it's less obvious when it's a wick in the middle of the bands. You know, when it's a wick in the middle of the bands that goes right to a Fibonacci pivot, okay, cool. You know, that tells me a little bit more. Or even when it's a wick right to the SMA itself. But in this particular instance, you know, the only thing that would have guaranteed that this was a good long is if that SMA stayed up and if the price reacted strongly and stayed up, and it did not. You know, once it was stuck around that Fibonacci pivot, it really showed weakness, and then that's why it broke back through the SMA. And then you don't want to fight the trend. You know, like I would not have entered a short there. You would have been correct if you entered a short there, but how the fuck would you know? Like, how would you know based on the volume that you're seeing? You know, other than, again, just like the levels of support that we need to form, which I would say is like right above. I think I said I was going to say this way earlier in the video. My apologies. The 73.8K level is the psychological level from March, 69K being the psychological level from 2021, but the 50% retracement mark of the October 2025 high is about 63.1K, and let's call it 63K. And the Fibonacci pivot on the higher time frames that is important, again, is 64K. So we really want to see support form basically between 60 and 64K, I would say, is where we like really need to see strength now that we have had a break to 59.9 and in general have just already spent a bunch of time down there at 63 and 64, which again, I think most easily is going to be represented by the reaction to the 66.1K pivot and that middle band of the anchored VWAP at 75.8K. If we show strength there, cool. You know, or if we don't even touch it, that would be our best scenario right now, is if we show strength of that 66.1K pivot and don't even touch this middle band of the anchored VWAP. If we do touch that, I think it's much more likely we see another break to the downside, possibly down to this trend line. This trend line is rising higher. You know, like when we interacted with it here, that was the 59.9K touch. Oh no, actually, where is that? Low 63.7, so I guess not quite as bad. I would be surprised if we touch that again. If we touch that again, it's not good. It's bearish for the price, and we can ignore the short-term push for bullish momentum. I do think another interaction with that is going to be important. So again, just to wrap up the video, 66.1K, we want to show strength there. Ideally, we don't even want to wick down to 65.8K. A wick wouldn't be terrible, but I think it invites another situation like these guys where we ended up giving it back. And I think that was a news event or something that promoted that, or prompted that rather. But that's what we're looking for at the moment. Strength at 66, above 65.8. That's going to tell us from the anchored VWAP, price has permission to head back towards the upper band. It ain't going to touch the upper band. It's way too high away, but it will trend back in that direction basically until it hits something else, some other immovable object, which I think is probably around that 80K pivot. I think the 80K pivot is super important, and that's going to be a more likely, if we break past it, cool, but can we hold past it? I don't think so. I don't think it's very likely. Again, I'll go over probably these reactions I would imagine will happen early Monday, depending on the rest of Sunday. I guess we can close out with that. Like, where do we need the week to close? That looks bearish to me. I'm sorry, it does. Like, that looks bearish to me. You can leave a comment down below if you know exactly what that candle is called, but to me, that looks like we're gonna open this next week and immediately retest the bottom of this candle at 65.7, which again, that is the anchored VWAP middle band, like almost identical. So in that particular instance, that would mean we do see a wick to it, likely. You know, the wick breaks through that, but maybe the candle, if the candle can close above 66.1 on the week, which it is at the moment, you know. So I would interpret, again, that's in 4.5 hours. If we can get a close above that, that's not terrible. It is still below on the daily SMA though. For the daily SMA, we need to get back above 67.5. And I do not see that at the moment. There's not really anything that is going to motivate us above that. Like, it would be different if we touched down already to 66.1 and had a strong reaction. That would have maybe been enough, but it's more likely, I think, this is going to continue to get pulled down. Yeah, it doesn't look good. I mean, it's fine for us because, again, we're just going to look for the next 4-hour break, which I believe is probably going to be one to the upside here. But we may have to accept this Fibonacci pivot. And I wouldn't normally like try and take a trade off of the Anchor VWAP specifically. That I would say was more of an indication of short-term strength than anything. Like I wouldn't take this as like, oh, I should short it here because it failed, you know. Like it is more information, I would say, for like remaining in a position or closing a position. Like obviously, again, if you're still in that short and the price starts to show significant strength here, maybe it's a good idea to close it since you're already 90 or 100% in profit at that point. You know, I don't know, doubling your money in 3 or 4 days is not good enough. Like, I don't know what the hell you're looking for, but that's what we would be looking for next, is an interaction with the bottom of the band that gives us a clear entry to the upside. And then we pretty much just need to wait and see if it can actually get through some of these lower term pivots, or if it just does not have the energy to push past them. I'm not really sure what I believe at the moment. I'm really just going to listen to these Anchor VWAPs. If it can stay above 65.7, 65.8 comfortably, again, ideally a wick no lower than that. And if we can actually show strength here, I mean, currently an interaction with that 4-hour SMA is probably going to put some resistance on that price. We already had some struggle at that price previously, that being 68.9, call it 69K. Why does 69K matter? Jesus, I don't know, maybe because it was the 2021 all-time high. So very important psychologically for the price to decide, do we have support there or is that resistance? If that forms as resistance, then we're going lower. We're not getting another retest of this guy. I don't know that I would interpret this as like a one and only chance. I don't know what that is on the older time frame, to be honest with you, but it's not a good sign to break it and immediately show weakness to the downside. So that's what we're looking for. I'll go over it tomorrow again. Hopefully we'll have an interaction with those pivots and possibly a close well above that Anchor VWAP, but that'll tell us trend moving forward. And then we're pretty much just waiting for a reaction to 69K and the downtrend Anchor VWAP at 70.9K. So there's a couple like really clear gaps basically that we need to fill. We're currently sitting right above one of them and right below another one. So tune in tomorrow where I'll go over it. Thanks so much. Have a great day, guys.